So tariffs have been a major concern for investors, especially here in 2018 with all the volatility that we've been seeing. And going into 2019, there are some more concerns that investors have around tariffs because there is an expected increase on these Chinese tariffs to around 25%. And if that does happen, there could mean a lot more downside in the market. But what we're going to be doing today is we're going to be looking at some of the stats out there on the S&P 500 companies and how many of them have actually brought up the topic of tariffs in their last earnings report. This will give us a better idea on if tariffs are something that companies are looking at and maybe things that are affecting companies' financials, or if it's just some fear out there in the market that's overblown. So without further ado, let's dive into this. Hey guys, if you're new to the channel, make sure to subscribe down below. If you like these kind of videos where it's more in-depth and kind of stats out there, which give you more insight into the economy and some fundamentals, that kind of stuff, drop a huge like on this video and comment down below to let me know that you do like it. And I'll gladly create more videos like this if that is something that you guys find value in. So as of today, around 90% of the S&P 500 companies have reported their Q3 earnings. So a company called FactSet actually went through all of these earnings transcripts of around 415 companies out of the 500 that did report. And they did go through to look for a keyword tariff in any of these calls. And that kind of gives us an idea if these companies are discussing tariffs or mentioning tariffs in their earnings. Now, lucky for us, they did publish this data, so this gives us a chance to look into this and see if it's something that we should be looking at and be concerned about. So out of the 415 companies that did report so far, around 138 of them, or roughly around 33%, used the word tariffs during their conference call. However, Q3 did have less mentions of the word tariffs than Q2 did, which is the opposite of what the market was expecting in my opinion here. So as a comparison, last quarter, around 38% of companies that reported mentioned the word tariffs in their conference call. So looking at this chart right here, we can see just how much tariffs have been a topic of conversation in 2018. So you can see for comparison, in Q3 2017, we only had 18 out of 500 companies mention the word tariff. And if you compare that to this year, Q3, it is a 767% increase in the number of companies that mention the word tariffs. So it is more than clear, in my opinion, that tariffs are a concern for these companies. But the good news here is that from Q2 to Q3, we can see that the numbers have gone down. However, in the next couple of quarters, this may spike up again if the 25% threat that I mentioned at the beginning of this video is imposed as we go into 2019. So I think it's really in the best interest of both China and the US, especially for the stock markets, to come to some sort of agreement before 2019 to help stocks recover from their losses in 2018. The recent volatility and sell-off that we've been seeing in the market could be a result of investors pricing in the possibility or high probability of a 25% increase on Chinese tariffs. Now on the flip side, if these tariffs do not get imposed and there is some sort of resolution, or maybe they get delayed a few months or a few years, then you could probably see an increase in these stock prices in the short term because investors will come back into these stocks and have more of a positive sentiment, at least for the shorter term. Tariffs have been really something that's been scaring investors throughout 2018. 2017, the topic did come up very little. It wasn't really much of a threat. But 2018 kind of went into full swing with these tariffs actually getting imposed. And as a result, investors have been spooked. And as a result of that, the stock market has been spooked and has been selling off. And like I said, if we do come to some sort of resolution in 2019, then we could see a recovery in some of these tech names, some of these stocks that have been hit pretty hard, and it would help the market to get back into a more bullish stance going into, say, late 2019 or even into 2020. Now, another interesting stat to look at is to see what sectors are discussing tariffs more than other sectors. So as we can see here, industrials have been the sector that has been talking about tariffs the most, and as a result, a lot of industrial stocks have been hit pretty significantly. So this is why stocks like Caterpillar, ticker symbol CAT, is down over 25% from its all-time high earlier this year. Now this also correlates with tariffs because we did see a spike in tariffs talk in Q1, which corresponds when Caterpillar took its first hit. Another thing I want to point out here is that in Q3, tech companies mentioned tariffs more than they did in Q2. And if you haven't noticed, NASDAQ or the tech stocks in general have been hit pretty hard recently. And this again could be correlated directly to tariffs, which is a big fear for investors going into 2019. But on the flip side here, you can see that you had consumer staples, healthcare, and other sectors like financials talk less about tariffs in quarter 3 than they did in quarter 2. And these stocks have been performing relatively well recently. Now, if you look at companies, for example, like McDonald's, Johnson & Johnson, Procter & Gamble, Pepsi, they've all been hitting pretty much close to their all-time highs, if not new all-time highs, and have been moving upwards, where some of these other big tech names like Amazon, Apple, Netflix have been hitting their new 52-week lows recently. So what can we really take away from this? Well, the first thing is that tariffs are a big concern in the market right now. A third of the S&P 500 companies did mention the word tariffs in their last earnings, and I suspect that going into 2019 that this number will spike once again if the 25% increase does get imposed. Now, as a result of that, I think that if those increases do happen, that we will see a lot more volatility, we will see more downside in some of these highly valued stocks like tech names, especially Amazon, Netflix, Adobe, other companies that have had phenomenal 2017s, 2016s, but have recently hit a wall and have been decreasing substantially. And the reason for this is because investors are concerned about revenue for these companies, because a lot of them did report a revenue miss in their last quarter, and they believe that if tariffs do increase 25%, that these revenue misses will be even more substantial in 2019. However, it's not all over yet. There is a G20 meeting, and there is talks that the US and China will have some sort of discussion around trade, and there is hope that there will be some sort of agreement, resolution, steps in the right direction that will be taken from this meeting. Now, if this does happen, this will help the stock market rebound. We probably will close off the year pretty strong. If it does happen, we'll have a strong December. And companies will most likely post stronger numbers next year if we do not have an increase in tariffs. And this, of course, will help companies beat on their revenue guidance as opposed to miss on those guidances from this last quarter. But this is pretty much the biggest bull catalyst in the market right now. And the bulls are waiting here to find out if there will be some good news that comes out of this meeting. So if you guys want to see a follow-up video once the G20 meeting does take place and what came out of it, what the stance is now, how the US and China are going to pretty much go forward from here, let me know in the comment section. I'll gladly make a video for you guys if you find value in those kind of videos. But either way, guys, hope you enjoyed this video. Don't forget to invest positively, and I'll see you in the next one. Peace.